That stock is really expected to grow. And what's really happening is there's a lot of pressure on that company to maintain the growth rate because if it doesn't, the stock price will collapse. So think of a price earnings ratio like this. Think about it like, imagine, does anybody remember when Tiger Woods became a professional golfer and he got $100 million contract from Nike and he hadn't won any golf tournaments yet. He hadn't made any money yet. Like his earnings were very tiny, but yet he was getting paid 100 million, and all the other golfers were really jealous. They were like, "Wait, there are guys who've won several tournaments who don't make that kind of money. How's he going to get 100 million?" So what basically was happening is his price earnings ratio was very high. If you look at the price they paid, Nike paid 100 million, and you divide that by the amount of money Tiger made that year, it would be 100 or 200 or something, right? Because he didn't make very much money before he started playing professionally. Now, if you go to another golfer who maybe has made more money than Tiger, let's say that that other golfer made 5 million that year. I think Greg Norman was the number one golfer at that time, and Greg Norman has 20 million in endorsements. So you could calculate a price earnings ratio in a way by taking the 20 million divided by 5 million. His ratio is 4. Tiger's ratio is 200. So Tiger is seen as a growth asset as a golfer because what Nike was betting on was not they weren't paying him for what he had done. They were paying him for what he's going to do. Whereas a Greg Norman at the end of his career, you're not really paying him so much for what he's going to do. You're paying him for what he's already did, right? So LeBron James, the money he makes now is not so much just based on what he's going to make, what he's going to do for the Lakers in the future. It's based on what he's doing right now and what he's already done as an athlete. And so ultimately, that's how people sort of look at stocks differently. And there are stocks that have high growth rates. Those stocks tend to have healthy options markets. A good example, high growth rate assets might be or high peak price earnings ratio assets might be like these quantum computing companies. They're really, really risky, super risky. High growth assets are very risky because if any little thing goes wrong, those stock prices can collapse on you. And so the reason that the quantum computing companies are so risky is because those things aren't making any money yet. Ain't nobody making big money doing quantum computing. They're anticipating how much money they're going to make. But then you have some companies that actually are making money that are still expected to grow. Nvidia is a highly risky investment because not only is Nvidia making more money than God right now, but they're expected to keep growing at an astronomically high rate. And that puts a lot of pressure on the CEOs and a lot of probability that stock collapse. So one little thing goes wrong for Nvidia, bad things can happen. So sometimes if you're watching the news and they say a stock is priced to perfection, that's what they're saying. They're saying, oh yeah, the stock, the price is so high that if they mess up a little bit or they give you any bit of bad news or just even good news that isn't as good as you expected, then that stock can actually collapse. So let's look at MicroStrategy. We're going to take a quick field trip into E-Trade, and we're going to see what MicroStrategy is doing right now and how a person might make money with MicroStrategy. So let me pull up the options here. All right, let's see. I'm pulling this up. Okay, all right. So here, okay, I'm sharing my screen. All right, give me a second here. All right. Okay, so here, if you're in any app and you want to find a certain stock, you can type in the name of the stock, or let's say I'm looking for MicroStrategy. Type it in here. It should give me the ticker symbol. Oh no, it didn't. Okay, MicroStrategy. Let's see if it comes up like this. No. Well, let's do it this way. STR. Okay. So here's the stock price as of the close of trading, 328. And they give you some bid and ask sizes and things like that, and the volume of the amount of trading that's happened with this stock.